All right. Looks like you guys can hear me. Well, actually, no one's even here. It's Sunday evening. I'm doing the market commentary this evening because I will be traveling tomorrow. I do appreciate you guys bearing with me and allowing me to do this for you. As you know, a good time and a good time to spend time with the family just here before school, and the fun to be able to enjoy my kids more on a one-on-one basis and be more understand what they're trying to do with themselves in their life. It's that simple. But today I want to talk about options. And in all reality, a lot of people think options are a scary word. With that said, yes, there is one option when used by itself that has unlimited risk. This is a short call, or sometimes called a naked call. The reason why, it's the obligation to sell a stock at a certain price for a certain period of time. Short answer, unlimited risk. Now, doesn't mean a short call is bad. A short call can be used to help pay for your protection. A short call can be covered, and which means it does not have unlimited risk if you have stock ownership or a long call. But why does this have unlimited risk? Well, if you're obligated to sell a stock at a certain price for a certain period of time, let's go find one. I want to use Apple. Apple's a good one. If you sold this option, someone paid you some money. So let's say back in the day, you sold this option right here at 350. You sold a naked call at 350. Someone probably paid you $10. A short call, the other side is a long call, or the right to buy the stock at a certain price for a certain period of time. So maybe the end of July, expected it to go down. You sold a short call. You are obligated to sell Apple at 350. And then the thing kept going up, and hey, right here at 355, you were probably okay. And you thought, all right, I'll run a little bit longer. And then all of a sudden it has its earnings and it jumps. And today it's sitting up here at, just say it has that earnings and it jumps, right? Today it's sitting at like 469. Dang it, I need to get my reading glasses on. And that's actually 459, excuse me. So where's the problem? You literally, if someone was to exercise this short call, if someone said, hey, I'm ready to buy the stock at 350, you have to buy the stock at 359.63 to turn around and sell it $109 cheaper at 350. This is where some of the big hedge fund guys have gotten their butts handed to them. It could be in the form of a warrant. It could be in the form of a short call. You could actually just short stock outright. Anytime you have an outright short, a naked short, a short by itself, a short that's not covered, you have unlimited risk. It's kind of interesting because putting that to an advisor, there's a firm with a naked short on Baidu. I'm a little bit frustrated because technically speaking, Baidu reported a higher second profit, but a slight decline in revenue. Net income rose higher. Earnings per share rose higher. Total revenue was higher than projected, but they had a significant ownership in IQ. And unfortunately, they made a comment that their next revenue could range between a 3% increase and a 7% decline. But IQ is under an SEC investigation and is brought to light by a firm that has a huge short on IQ. It makes me wonder if to a certain degree, they created this to get their butts out of that short on IQ. It almost seems like a conflict of interest. You shouldn't be allowed to trade it negatively or to the downside and be able to report it. So yes, for some people that trade options, a naked short call has unlimited risk. But through an experienced person, let me share with you where these options can be helpful for you. Sometimes we have you in a stock replacement strategy of a long call. Long call is nothing more than the right to buy a stock at a certain price for a certain period of time. That's it. You're going to pay for the right to buy a stock at a certain price for a certain period of time. Some of you have these positions in Apple. This is my non-steering group, so this isn't you guys, but there are some similar positions in here. Some of you have January 22 350 calls, $32 worth 141. But that's not what I'm trying to show you. Let me go through this one more time. If we were to put a new position on, if we were to go to Apple, find a stock replacement and option, you could buy the stock for $459.63. And my first question to you would be, what is your risk in the trade? And the common answer is, well, I don't know. But in real life, an educated investor would tell you, hey, the risk is $459.63. Every penny I have is at risk in this position, which is correct. Well, what if I have a stop? If something were to happen overnight and we would find out that Apple had faked all their numbers, you could have a stop at 450 and be sold out at 100. Please don't think a stop is protection. When you hear an advisor say, oh, well, I protect you with stop losses, no, you have an idiot that does not understand the stock market, that does not understand what a stop loss is. I'd be willing to talk to him at a moment's notice and help him better understand his own job. So there's the risk if you buy the stock. But sometimes we're going to go out to a stock replacement strategy. Let's go as far out as we can to September 2022. So we could go out to, I'd probably do like a that's August, September, 450. I would probably go out to like a 460 and at the money. I could buy the right to buy the stock. Let's do 450. For $99.15, I could buy the right to buy the stock at 450. The risk in my trade is $99.15. I don't have $459 at risk. In fact, if you were to take that $99, I'm going to get a calculator, $99.15 divided by 459.63, I'm only taking 21.5% of the risk in owning the stock. Now, I paid for the right to buy the stock at 450. It's already $9 in the money, $9.63. So to guarantee me a profit, the stock would have to trade $450 plus the $99 I spent on it. My break even would literally be roughly $550. But I have between today and September 2022 for Apple to go higher than that. Now, the risk in the trade, if it costs me 21.5%, we've just taken out 78.5% of the risk of owning the stock. The most you could lose is $99.15. You can't lose $459.63. Well, Kevin, Apple probably won't do that. It's done it before. So don't be so naive to think, well, that's not going to happen to Apple. My comment to you would be, why the hell not? It's happened before. It definitely could happen again. 78.5% of the risk of owning the stock you've taken out of your, well, you've taken that much less risk by owning an option that is a stock replacement strategy. That is what we've been doing through this bull run in our stock market. We've been using these stock replacement strategies to make some ridiculous returns. Going back to what I was showing you, in this group, we also, I think you guys have some as well, but we have 5 January 22 350 calls. What we spent back in the day at $32.76 is worth $141.55. So if I took 141.55, divided it by 32.76, that's what, a 432% return? Not bad. Not bad. Maybe it's the other way around. 32.76 divided by 141.55. Nope, it's the other way around, because again, it's more than triple, right? $32.76 has turned into $141.55. We're talking over a 300% increase in your trade. When was the last time you had a 300% increase in any stock that you've been in? Why would we do this? Well, because most people can't afford a $350 stock. But in this case, it was only 10% of the value, roughly. What an amazing opportunity to take out 90% of the risk of owning Apple and getting a 300% return. That is the beauty of options. Now, let's use Apple in one other way. If I can go ahead and do it. We collar trade, or we use a protective put, right? So Hurley Investments collar trades or uses a protective put. That long put is equal to the right to sell your stock at a certain price for a certain period of time. Not an obligation, but you have the right to sell it. Let's use Apple again. Buy to open 100 shares of Apple at $459.63, right? Times your 100 shares. Don't forget. $45,000, $4,953, right? Pretty sure that's what it is. Let's make sure. 459.63 times 100. Of course it is. Risk in the trade or the investment into Apple shares. Every freaking penny. You're taking a $963 risk. With that said, when you're around earnings, or we're going to be going out to most likely November, right? Where we're expecting a bunch of risk. If we went out and checked out a November, 99 days to expiration, a November put that acts as insurance that gives us the right to sell a stock at a certain price for a certain period of time. I'd probably want to go at 360. We could spend $36.70. You would buy to open a long put for $36.70. Just take one more look at that and see what the mark is. It's going to be in between there. We're going to say 36. Let's take the high side, 36.70. That expires in 99 days. And we're going to choose the 360 strike. So we have the right to sell the stock at 360 for the next 99 days. Let's do some math. Total investment, or let's do it this way. Let's say new cost basis of the stock ownership, $459.63, plus the cost of that long put at $36.70. Got to add them both together because you bought both of them, right? Gives you a new cost basis of $459.63 plus $36.70. New cost basis of $496.33. New risk in the trade. Pretty simple. You have the right to sell it at 460 minus 496.33 equals $36.33. That's usually a negative sign there, right? Or just take 36.33 divided by 459.63, or you have 7.9% risk of your total invested capital. To do that math and make it a dollar figure, right? 45,963 was what you would have spent for the shares, right? Old risk, new risk, pretty simple. $3,633. Between you, me, and the fence post, $3,633 is a hell of a lot less risk than 45,963. If we had just bought the long call, right? If we had gone to these leaps, and let's just, I'm just going to do the math in that regard too. We found out that the September 460 cost $99.15. If we were to take $99.15 times 100, risk in the trade is equal to $9,000 and $9,915. Still a hell of a lot less risk than 45,963, which is what it costs to own the stock. Now, Kevin, there's a little bit of time decay. What if the stock doesn't get up to, 460 plus the cost basis? We did 450, excuse me. 450 plus the cost basis in 2 years. Yes, that's the risk in the trade. But I don't care what you say, it takes out 78.5% of the risk of owning the stock. You don't get a dividend. It can go through stock splits and it'll go through option splits that won't necessarily be in your favor. But there's a lot less risk in those that know how to use options properly. When you hear an advisor or you hear anyone talk about, oh, there's so much risk in options, that should be your first red flag that either one, they don't know what the hell they're doing, or two, they are using the options that are not in your best interest, which creates a ton of risk. Now, I could go through a lot of education here. Buying that long call for a short period of time, not giving enough time to move, going way out or always buying protection all the time, in which case you're not going to make any money because the profits you're giving away by overprotecting the stock. I get it. It's here. With that said, I love the fact that we can add shares to your account through the profits from options. When we put that protection on, the stock falls by 10%, we get to add 10% more shares of stock to you. I love it. That's the beauty of doing what we do. It also allows you to sleep at night. You're not going to lose 35% of your account like a lot of people did at the beginning of the year. That is someone that the name of the game was to collect your funds, not to protect it. We do something significantly different. If you ask me where our market's going to end this week, I'm going to say lower again. I was wrong last week. The markets were up 0.64%, but it seems like we're flirting with that overbought line, and we didn't stay on it long before. well, I was going to say we don't have a deal, but dang it if the house isn't coming back for one more week. So maybe we will get a stimulus deal. But technically speaking, we're not in for a big week. We might have a stimulus bump, in which case I'm wrong, but we don't look like we're in for a big week. Hence, I think we're going to go lower through this week. Also, it's the start of the retail sales earnings numbers, which seems to have the ability to drag down the whole market. We look at the S&P 500, same exact story. I would expect it to be lower, not by a significant amount. NASDAQ, same exact story. So I'm just using some technical analysis. We'll probably have a pretty flat to slightly lower week. Where will we end August 2020? Not this week. I'm expecting a stimulus package, but it wouldn't surprise me if before the end of the month we started to head down as we go through September and October. September and October are historically the two back-to-back worst months, October being the worst, September being the third worst month in the market, February being the second. Those are the three worst months historically in the market where we have down markets. I see nothing that's going to benefit us or save us this time through. Let's see here. JD and Cena, some foreign somewhat stocks are reporting. Home Depot, Kohl's, Walmart, Cree on Tuesday, Lowe's, TJ Maxx, L Brands, Nvidia, Target on Wednesday. Baba, Eli, L, which is, I can't remember what it is, but and Ross Stores on Thursday, Buckle, Deere, and Foot Locker on Friday. Economic reports, not a whole lot's coming on. Empire Manufacturing and AB housing market. Building permits and housing starts on Tuesday. FOMC minutes shouldn't move the market because obviously they're trying to be accommodative. Leading indicators on Thursday with initial and continuing claims will be important, and monthly options expiration on Friday. I saw nothing international, but there's a lot of Japanese economic reports coming up. I'm still trying to let things run, but I am preparing and getting ready to add protection on to get us up to the election, in which case I'll reschedule it and take our profits and put it on again. Pretty amazing. Joe Biden picks Senator Kamala Harris to be his vice president running mate, making her the first black woman on a major ticket. I'm going to bite my tongue because she really pushed herself as a brown or Indian woman in California. It's just until here recently that she considers herself a black woman, or I'm waiting for her to say African American, and I'm going to kind of chuckle and say, I thought you were Jamaican Indian. But she really pushed herself as a brown woman in California, was very tough on minor offenses. And the reality is, California put a lot more people in jail for minor offenses with the understanding that if we can get them now, they wouldn't become major offenses down the road. So I'm not in any way, shape, or form condemning her for her past district attorney job. In fact, if anything, I think she did a fabulous job. You break the law, I think you should go ahead and pay for it. With that said, seems to be a double standard. Illegally entering the U.S. is not breaking a law. I also, it's horrible to see that she was unfaithful and had an affair with Brown, which I guess that happens more often than I'm willing to admit. Very interesting article. I think it is a good pick for the Democrats to try to win their seat at the White House. You couldn't have found someone that would be better for Biden. Again, I think Biden is facing dementia. So I do think that if they win, there's a good chance that Kamala Harris could be our first woman president. I found another interesting article. I agree with it pretty much 100%. I don't like it. I will vote Republican most likely, but great article here on everything she brings to Joe Biden's campaign that he can't do himself. Really, the numbers work. They are correct. It's the best pick for Joe Biden and their chance to win the presidency. A little bit about the stimulus deal. Again, they did leave without urging a stimulus deal, but Pelosi is calling the House back next week. So there is an opportunity, but here's what's going on. Here's what they're fighting about. I found an amazing article on Robinhood and how they're making money. And it's going to shock the crap out of you for one little bit of information that that's going to get you. That's all I'm going to say. Options trading makes money, but you're going to see a little broker charge that's in there, and you're going to see where they're making their money. Please go through it. It is very shocking, and the numbers are astronomical. I can't believe the amount that these brokers are making. It's perfect. It's perfect. Little market maker spiff. Please read through it. It is a conflict of interest, but enjoy it. Phase 1 deal, China won't catch up with its commitments. Man, I want to give China a pass with COVID, but let's see how they renegotiate. I hope they can keep up with their commitments to the U.S. It levels the playing field when it comes to trade. 40% of the U.S. COVID tests come back too late to clinically be meaningful, data shows. Disappointing that we can't protect our own. Please read through this. And last but not least, Warren Buffett says 3 decisions in life to separate high achievers from the mere dreamers. Number 1, love it. Don't risk what you have to get something that you don't need. Invest in relationships with honest and ethical people. And last but not least, don't measure your life by how much money you have, the biggest house you have. Measure your life success through one word, love. I am taking some more time where I'm going to be out in the Flaming Gorge area and in Wyoming with my family. I'm trying to a certain degree, I guess, reconnect with my kids that I missed somehow that opportunity with my oldest son that was possibly looking to go out on his own. He has since changed his mind, but it did shock me. It did take me by surprise. So I'm just looking for this opportunity before my kids start school to one more time reconnect and make sure I haven't missed something with my other 5. My oldest will stay here with mom. They've got some great baseball games he's going to be in Monday, Tuesday, and Friday. Yes, we will be watching the markets. Key will cover me for Wednesday, where I will be completely out of pocket. I will cover for him on Thursday, where it's his birthday and his wife has some neat things scheduled for him to enjoy. And obviously, we'll be on the phone together Friday, making sure that we are on top of options expiration. Tuesday, trade finance adjustment will be canceled. Thursday, I will do a question and answer for you. I appreciate you guys being here. I appreciate you as clients. Have a great week if I don't talk to you personally. And we'll wrap this up tonight. Good night, everyone.